Imagine waking up 25 years from now with $20 million in your portfolio, all because you made a smart decision today. If you have $1 million to start and invest $13,500 every month, you could be sitting on a fortune, and I'm going to show you exactly how. In this video, I'll break down the perfect ETF portfolio, how compound growth will work in your favor, and how to retire a multimillionaire. We'll be talking about how to turn $1 million into $20 million. This is not a get-rich-quick scheme. This is a long-term investing strategy for those of you who want to build wealth over time and retire with a substantial nest egg. Whether you're just starting out or already have $1 million in the bank, this video is your roadmap to financial freedom. So buckle up, smash that like button, and let's dive into the world of smart investing and massive returns. Let's go! Before we get into the best ETFs, let's answer the big question. How does money grow? It all starts with understanding the fundamental principles of wealth building. You see, it's not just about putting your money in random stocks and hoping for the best. It's about having a strategic plan, a blueprint if you will, that guides your investment decisions and sets you up for long-term success. There are 3 simple rules to follow. Invest in the right assets. Not just any stocks, but high-growth ETFs that compound over time. We're talking about the engines of the market, the companies that are shaping the future and delivering consistent returns. By investing in these ETFs, you're essentially buying a piece of their success. Stay consistent, no panic selling. Stick to the plan for 25 years. And that's where consistency comes in. The market will inevitably have its ups and downs, but the worst thing you can do is panic and sell when things get rough. Remember, we're playing the long game here. By staying invested and riding out the volatility, you give your investments time to recover and grow. Let compound interest do the work. The longer you stay in, the bigger your snowball grows. It's like a snowball rolling down a hill, gaining more and more snow as it goes. The longer you let it roll, the bigger and more powerful it becomes. With this mindset, you're already ahead of 99% of investors. Now let's build your money machine. This ETF portfolio is designed for maximum growth, global diversification, and long-term success. We've carefully selected a mix of ETFs that provide exposure to different sectors of the market, both domestically and internationally, ensuring that your portfolio is well diversified and positioned for growth. Remember, diversification is key to mitigating risk and maximizing returns. 40% Vanguard S&P 500 ETF, VOO, invests in America's top 500 companies like Apple, Microsoft, and Google. This ETF gives you broad exposure to the U.S. stock market, which has historically been one of the best performing markets in the world. 20% Vanguard Total Stock Market ETF, VTI, covers all U.S. stocks for complete market exposure. But we're not stopping there. We're also adding the Vanguard Total Stock Market ETF, VTI, to our portfolio. This ETF goes beyond the S&P 500 and invests in all publicly traded U.S. stocks, giving you even broader exposure to the American economy. 10% iShares MSCI World ETF, URTH, adds global companies from Europe, Asia, and beyond. Now let's talk about global diversification, because remember, the US is just one piece of the global economy. We want to make sure our portfolio is diversified across different regions and markets. That's where the iShares MSCI World ETF, URTH, comes in. 10% iShares MSCI Emerging Markets ETF, EEM, gives access to high-growth markets like China, India, and Brazil. But here's the thing about emerging markets, they come with higher risk. That's why we're only allocating 10% of our portfolio to the iShares MSCI Emerging Markets ETF, EEM. This ETF gives us exposure to some of the fastest growing economies in the world without taking on too much risk. 5% Vanguard REIT ETF, VNQ, owns real estate without buying property. Now let's talk about real estate. Real estate is a great asset class to have in your portfolio because it provides diversification and a hedge against inflation. But buying physical property can be a hassle, right? That's where the Vanguard REIT ETF, VNQ, comes in. 5% iShares 20-plus year Treasury Bond ETF, TLT, provides stability during market crashes. Now, no portfolio is complete without some bonds. Bonds are considered a safe haven asset class because they tend to hold their value during market downturns. We're adding the iShares 20-plus year Treasury Bond ETF, TLT, to our portfolio to provide stability and reduce volatility. 10% Invesco QQQ ETF, QQQ, focuses on tech giants for long-term innovation growth. And finally, we're adding the Invesco QQQ ETF, QQQ, to our portfolio. This ETF tracks the NASDAQ 100 index, which is heavily weighted towards technology companies. This mix gives you strong U.S. exposure, global reach, tech growth, real estate, and stability, the perfect recipe for building long-term wealth. Chapter 3. The $20 Million Roadmap. Now, let's talk numbers. Here's how your money grows over time. Year 5, $2.1 million. Year 10, $3.96 million. Year 15, $8.19 million. Year 20, $11.35 million. Year 25, $19.88 million. Imagine this, just 5 years from now, your initial investment of $1 million could potentially grow to over $2 million. That's the power of compound growth. As the years go by, your money keeps multiplying, building upon itself like a snowball rolling down a hill. By year 10, you're looking at almost $4 million. By year 15, you've crossed the $8 million mark. And by year 20, you're well on your way to becoming a multimillionaire with over $11 million in your portfolio. But it doesn't stop there. Because we're in this for the long haul, remember? By year 25, your portfolio could potentially reach a staggering $19.88 million. That's almost 20 times your initial investment. And if you keep going for 30 years, you could have over $33 million. This is the power of patience, discipline, and a well-crafted investment strategy. By staying the course and letting your money work its magic, you can achieve extraordinary results. This is how the rich get richer, by letting their money work for them. They understand that wealth is not built overnight. It's built over time, through consistent investing, smart decision-making, and a long-term perspective. Chapter 4. Avoid these costly mistakes. But beware. Even with a great plan, many investors fail because they make these mistakes. Panic selling markets crash, stay invested, and buy more instead of selling. Remember what we talked about earlier? The market goes up, the market goes down. It's a natural cycle. But when those downturns hit, it's crucial to resist the urge to panic sell. In fact, market dips can be a great opportunity to buy more of your favorite assets at a discount, not rebalancing. Every year, adjust your portfolio to keep your percentages in check. Now let's talk about rebalancing. Rebalancing is the process of adjusting your portfolio to maintain your desired asset allocation. Why is this important? Because over time, some investments may outperform others, causing your portfolio to become unbalanced. Ignoring taxes. Use tax-efficient accounts like IRAs and 401(k)s to maximize gains. Taxes can eat into your investment returns if you're not careful. That's why it's crucial to be mindful of taxes and take advantage of tax-efficient investment accounts like IRAs and 401(k)s. Short-term thinking. You must commit for 25+ years to see the full benefits. Remember, this is a marathon, not a sprint. Building wealth takes time. It requires patience, discipline, and a long-term perspective. Stick to the plan, and you'll come out on top. Chapter 5. Take action and change your future. Now, the most important step, take action. Step 1. Open a brokerage account and buy these ETFs. The first step is to open a brokerage account if you don't already have one. There are many great brokerage firms out there, so do your research and choose one that fits your needs and preferences. Step 2. Set up automated investments of $13,500 per month. Automation is your best friend when it comes to investing. Set up automatic deposits into your brokerage account and set up automatic investments into your chosen ETFs. This way, you're investing consistently, regardless of what's happening in the market or in your life. Remember, consistency is key. Step 3. Stay patient, don't panic, and watch your wealth grow. And finally, be patient. Building wealth takes time. It's not a get-rich-quick scheme. There will be ups and downs along the way, but as long as you stick to your plan, stay disciplined, and keep your eyes on the prize, you'll be amazed at what you can achieve. If you found this valuable, like, subscribe, and comment below. I'm in to commit to your millionaire journey. Your likes, subscriptions, and comments help me reach more people and spread the message of financial literacy. Let's build wealth together. See you in the next video. Outrow, start building your $20 million future today. There you have it, the ultimate ETF investment plan to turn $1 million into $20 million in 25 years. Remember, this is just a starting point. Do your research, adjust the portfolio to fit your risk tolerance and financial goals, and always consult with a financial advisor if needed. This is not about getting rich quick. It's about playing the long game and building lasting wealth. With time, consistency, and the right strategy, you can achieve financial freedom and live life on your terms. So, what are you waiting for? Take action today and start building your $20 million future.